Mark Matthews is with us of Bank Julius Baer and Company. Mark, great to have you back on the show. Appreciate your time. We could have been, if we were speaking on a Friday morning, things would have looked so different, right? And then we got the session on Wall Street on Friday, which was down again. What do you make of it? And is it largely the older dynamic kind of reasserting itself, which is higher yields, higher dollar, lower equities, at least in the US? Go on.
I think we're putting in a bottom, and from a technical perspective, it would be nice to build a base, a horizontal base of support before moving higher, instead of just a 45-degree angle taking off again, which was what Thursday looked like in the U.S. trading sessions. So we are constructive on markets, and I know that flies in the face of what appears to be reality of high yields that are going higher and sticky inflation. But to our mind, the inflation, if you look under the hood, is peaking out and coming down, including in the stickier segments like rents and healthcare in America, which are important. I think rents are about 25% and healthcare is about 15% respectively of the headline basket. And so that's what I think. I think it's a choppy bottoming process, but with the market already down 25% this year in the United States, it's too late to be bearish.
It's too late to be bearish, and it's always good to be optimistic and to start the show with voices like yours. Mark, good morning and thanks for joining in. You have constantly maintained that you would remain invested and would not panic despite the challenges. Would you extend that argument to India as well? And has the time come to perhaps top up in markets like India?
Well, clearly, if we could rewind the clock, we would have rather had much more exposure in India than in the United States this year, which shows you how things change, because I always think back to 2008, and my big mistake then was believing in decoupling. I don't know if you remember, that was the big theme back then, that emerging markets like India could decouple from what was happening in the United States, which was wrong back then. But it appears to be right today, because India's done much better than the United States. And I continue to be constructive on the Indian market. I'm aware of the arguments that are made against it, primarily valuations and higher rates. But I think overriding that is a large domestic investor base and a positive capex cycle that should last a couple of years.
Hi, Mark. Good morning. I liked your starting comment. We are putting in a bit of a base, and it's too late to be bearish. So, the bulls will be really listening into what you have to say. And since you're constructive on the Indian markets, what are the sectors you're looking at? What are the themes you're looking to be constructive on out here?
Nigel, I wish I had better prepared for that question. I must admit, I've been preoccupied by the United States primarily and China secondarily. So I have no fresh insights into India beyond saying that our favorite sector is the financials, and they're just natural beneficiaries of an economy that is improving, and their NPAs, as you know, that whole legacy is behind them now. So we can expect loans growth in the mid-teens, which should be good for their share prices, the banks.
And banks is right in the top of the list in terms of what people are very bullish on here. Mark, there is, since you are, as you said, have been preoccupied with the US, there is this seasonality kind of data as well around midterms and what markets do, markets rally, etc. I mean, what does the data say, really?
It says that you're absolutely right, that after midterms, markets tend to do well, particularly if it is a what do they call that? A Congress where there is not one party that controls the whole thing. Sorry, I can't remember right now. You would probably know. But anyway, we're looking at, I think, for sure, the Republicans getting the House, possibly the Senate as well. Markets tend to do well when the Congress is not in the hands of the same party that's running the White House. The old theory is that because the politicians are so busy squabbling amongst each other, they don't have the time to interfere in business. I don't know if that's true, but then the other thing is that the best time in the market is typically the beginning and the end, and we're entering the final months now where October and November and December typically are very strong months seasonally. So unless we have some kind of, kind of Lehman-esque, Lehman Brothers type event, and I must say that the cracks forming in the UK are somewhat disturbing and something we do need to watch closely. But barring that, if you look back in history at other years when the S&P has been down so much up until this time of the year, with the exception of 2008, they rallied strongly into the end of the year.
One final question, Mark, before we let you go. Since you said that perhaps this is a bottoming out process and it's too late to be bearish, do you reckon that even if there's no price correction in markets like India, we could be in a phase of a painful and perhaps even frustrating time-wise correction where we sort of amble in this range for the lack of a positive trigger?
Possibly, yes. I think, having been an outperformer, it would be a laggard if the markets that did already go down a lot this year started to rebound. And the ones in Asia which are garnering some attention are those export-heavy markets of North Asia, where you've also seen very large depreciations in their currencies, believe it or not, much larger than the rupee, the yen and the Korean won, down about 20–25% so far this year. I still like India better. I think there's also an issue with the semiconductor sector that could weigh on those markets. But anyway, yes, I think India could meander sideways for a while, but I really don't see much downside because of the good things that I think are going on there, the strong domestic institution, domestic investor base.
Mark, it would be amiss if you don't kind of at least mention the UK in the midst of all of it, right? The dramatic U-turn, but was it a U-turn enough? Briefly, if you have any thoughts, because, even though after what happened in the UK on Friday, you had yields which continued to move higher after an initial knee-jerk reaction lower. So the market's not convinced.
No, the market's not convinced. I think it's gone beyond the budget, and it's an issue of whether the Prime Minister survives. And the former Chancellor, Rishi Sunak, would have enough approval, I think, from the Conservative Party to become Prime Minister. But when you swap two leaders so quickly, which would be the case if he was to come in, I think you have to go to the people to achieve a fresh mandate. Otherwise, you won't be able to get anything through Parliament. And the way the polls are suggesting it, the Conservatives wouldn't win if there was an election call today.